Okay, welcome back to the channel, MegaWhale team. Thanks for tuning into today's video. I hope everyone's having a fantastic day today. We're going to be diving into the Bitcoin chart, looking at a market analysis, talking about supports, resistances, triggers, demand zones, and our diagonal levels. We're going to do a technical analysis, looking at some indicators, talking about the price expectations and predictions. We're also going to go over the DXY chart, the total cryptocurrency market cap, and the Bitcoin dominance. And we're going to be answering a community question. And this question is an interesting one. I'm going to bring it up on screen now so you can see it. We're going to answer it at the end of the video. And this is a subscriber from the last video. I'm going to zoom up a little bit. He said, I have a question, MegaWhale. What would you say is a realistic growth attainable for a smaller portfolio? Less than $10,000 in the next bull market. So we're going to talk about that question. We're going to answer the question as well as extend from that question a little bit. We're going to talk more about, obviously answering the question, but we're going to go on to a little bit of a tangent and also talk about how you can expect to manage your funds in a bull market to maximize your profits. Where should you be putting it at certain times? We're going to use a few charts to explain that to you guys later in the video. So before we do get started, I want you to head down to the pinned comment in the description, click the links, specifically our Telegram channel, join our Telegram channel. We do a variety of market updates, exclusive stuff that you won't see on YouTube. Since we only do one update on YouTube a day, we can't put all our information in here. Sometimes we do updates throughout the day. So if you want to stay very up to date with all our market updates, analysis, technical analysis, videos, everything, link in the description to our Telegram. Let's dive right in. So the Bitcoin chart is looking pretty interesting, guys. We don't have much of a difference in regards to the macro structure than we have in the last few months. We've talked really a lot about this ascending channel. And for the new viewers, I do want to point out an ascending channel is where you have two parallel lines that are equal distance apart, which means they're not converging in an uptrend. All right, and you have the price either entering from the top side. You can also have the price entering from the bottom side, but in this case, with the price entering from the top side, we have at least 2 touches of the top trend line and 3 touches of the bottom trend line. From here, we expect a little small pump, a retest of this trend line, a break, a rejection, and a continuation downwards. The distance between the apex and the candle at the bottom, not the stick, the candle. All right, so the opening price or closing price is the same distance between the top of the wedge, so top of the channel, so the final retouch of the top resistance, and the expected bottom. All right, so we're going to show you on the chart real quickly. We're not really going to be talking about this much today. I really just want to emphasize this to our new viewers on what the worst case scenario could be for Bitcoin, and of course taking the measured move from here to here, extending that to here, we can see anywhere between about 13,000 and bring it down to this one to about 12,000. That is the worst case scenario. That is definitely not what we think is going to occur. All right, we don't think that's going to happen. Just pointing out the worst case scenario. We think $24,000 will be our target. We've talked about that multiple times. We're not going to go over it again. So these red lines are horizontal resistance lines. This gray zone is our horizontal resistance range. And I've had a lot of questions in the past. They go along the lines of, hey, MegaWhale, why do you have a solid black line and these dotted lines? Well, I think that's a question I should, answer now, because I have had a lot of questions about that. I haven't really got around to answering that. So we're going to talk about that today. I want you to imagine these zones here, and I completely screwed that up. Here we go. I want you to imagine that these zones here, so these gray zones, are the same as this zone that I inputted into a chart. It is nothing more than a support or resistance range. That's all it is, a support or resistance range. The reason I have 2 lines instead of a box is because these ranges or these specific levels within this range hold different weights. All right? So the reason I don't have it over here is because within this range, I expect an equal distribution of historic buys or historic sells. Therefore, at any particular price point between these 2 little lines into this gray zone, we can expect a resistance or a support. All right. On the contrary, compared to this zone where we have a dotted line and a solid line, we expect the dotted line to act as a stronger point of support in comparison to any point particularly in time below it and up to this solid line. Does it make sense? I hope that makes sense. Up the top instance, for example, we expect a rejection in price anywhere above or on the black line, and we expect a very strong rejection in price if the price touches this dotted line. What does that mean? Well, it means the dotted line is a strong point of confluence on the chart. Meaning if we lose the dotted line on the bottom side, we expect aggressive downward price action, which we have seen. And if we break the dotted line on the top side, we expect aggressive price action to the top side. If we break through the black line over here, we expect a move to the dotted side. And if we break the dotted side over here, we expect a move to the black line. All right, now we got that out of the way. What happens next? Well, scenario number one, we lose the black line, we head down. That's going to send us to 24,000. There's almost no doubt in my mind that if we lose the black line, we go to 24,000. We've done 100 different analyses on that before. Go ahead and watch our videos. Almost every video we talk about that. We're not going to talk about it today though. All right, we're going to talk about more about the bullish case scenario on the chart today, talking about what we can expect or in regards to trigger zones, what we need to see more specifically for the price to rise. We're also going to talk about short-term analysis, what we expect to happen in the next few days, and then we'll go ahead and talk about the rest of our stuff. Before we get started, I just want to quickly talk about this. I wanted to quickly introduce my new favorite exchange, Bitget. Bitget is a non-KYC exchange, which is particularly beneficial for members in the UK and Australia who are limited by certain trade restrictions. Bitget has 250 plus spot trading pairs, as well as 60 plus leverage trading pairs, up to 125x leverage. Sign up now in the link in the description using our referral code to get up to $153 in rewards for completing 4 separate tasks. Let's go ahead and dive back into the video. So we're going to get into a technical analysis now, and the first thing I wanted to point out was our candlesticks. And I have noticed on the daily chart, we have printed this candle here. I'm going to zoom up on it so you can see this candle here. This candle is what you call a spinning top. Now, for those of you who know what a spinning top is, congratulations. You can skip like 10 seconds ahead while I answer this, but if you want to find out a little bit more, just stay tuned a little bit. So a spinning top is essentially a candle period which signifies exhaustion in a trend. So we can have a spinning top, which we're seeing, which comes from the bottom side up, or we can have a spinning top which comes from the top side down. Now it's very, very particular that you do not get mixed up with a doji. This is called a long-legged doji candle. All right, this is very different. This signifies that during this period, bulls and bears had equal strength. All right, bulls and bears had equal strength, which means the price can continue in any direction. This signifies that bears are gaining strength over the bulls in this period. That can signify a trend reversal is possible. Not always. It doesn't always signify it. There's a lot more to it than just that. But it can signify a trend reversal is possible. Thus, we need to keep an eye on this daily candle, because if this daily candle goes below this line here and closes, we can expect a move backwards down to this level. All right. That is basically all the bearish stuff we're talking about today. The short term, if we get a daily close below the base or the opening price of this previous candle, we can expect a move back towards the $37,000 range. And we already know what happens there, guys. That is a super strong support. If we lose that level, we're in a lot of trouble. We're in a lot of trouble. All right. Let's talk about our bullish case scenario. So bullish scenario. And we did a quote in our Telegram and in our Twitter yesterday. Specific quote that we won't mention, we're going to talk about today. We're going to talk about it now. So we've said we need to see a breakout of both the descending wedge as well as the 100-day moving average. I think I said something along the lines where we need to see a collective breakout of the descending wedge and a daily close of the 100-day moving average. That's kind of along the lines of what I said. I think that is what we need to see. So we need to see a break of this level here and a daily close above this level. If that occurs, that will signify we have some strength towards the upside. If we have strength toward the upside, where's our next major resistance zone? Well, it is here. So from this level, we can expect a small rally up into here. Either we find a lot of resistance over here, get rejected and head back down, which is a real possibility, or we find support, break through. The moment we break through this level and close a daily, for example here, all right, for example here, we will see a push upwards into this range. That'll be a perfect opportunity to scalp some altcoins, a perfect opportunity to get some profits in before the next move. What happens if we get to this range? Well, we've seen many times before that as soon as we break the $44,400 level, we either push up to the black line, all right, and get rejected, push up to the dotted line and get rejected, or we find resistance on the 200. So the answer to that is what happens first? Well, the 200-day moving average will most likely act as the first resistance. Therefore, we can expect a push upwards to that 200-day moving average. When that occurs, it can be anywhere between $47,000 to about $46,000 before we either get rejected or we break past it, confirming that we are now in fact in a macro uptrend. The bull market has a potential to resume, if not consolidate higher and then resume later. All right, that is our stances, that's our opinions, that's what the data is suggesting. That is the most probable and realistic expectations if you are right now still bullish. So we talked about a bearish scenario, we talked about the bullish scenario, we talked about the short term, we talked about the macro. Let's talk about how you should manage your portfolio, or I guess your personal expectations right now. And we've said it already, between this zone, we are in a very strong zone of support. The only problem is, while we're in this zone, we are at tremendous risk of a drop below this level and a severe crash. The difference is, these last two periods, we didn't close the daily candle below the dotted line. We have now closed the daily candle below the dotted line. So if you are buying long-term right now, or you're thinking about buying long-term right now, you are exposing yourself to severe risk. The reason being, the long-term or the short-term price target will be anywhere between 4 to 6.5%. We can get rejected at any of those ranges. If we break past it, different story, but we have strong resistance between any of those ranges. The downward price target is 24,000. Your risk reward ratio is 0.11. Taking a long-term entry or building a long-term portfolio right now is nothing more than gambling, and in my opinion, is a ridiculous thing to do. All right? It is much better for you to wait for that 4.5% move, that 6% move, establish, reclaim this dotted line, establish a small uptrend, then take the same risk, all right, up over here. You can apply a stop loss below that line, 6% stop loss, and then you have your target of 10%. That's still a favorable risk, 1.77. I wouldn't take it, I don't know if I'd take that with a large amount of money. 1.77 isn't high enough for me, but it is more favorable. Alternatively, even if Bitcoin's price moves upwards and breaks through here, and we're officially bullish, you're not missing out on much, guys. Altcoins aren't going to all of a sudden rally in the equal amounts Bitcoin rallies. They are always going to be lagging. So you're buying altcoins here, you're buying altcoins here. What's the difference? Maybe 10, 15%. Count that as insurance, because if altcoins crash and if Bitcoin crashes, altcoins will drop a significant amount more. All right. So what I'm trying to get at is you need to plan your moves. You need to plan your trades, plan your decisions, have a game plan, and stick to it. Trading is very much based on probability. It is all probability. You're trying to identify all different directions and then using analysis, which we have been doing, which we're going to continue doing in a second, to try prove the validity of certain directions or disprove certain directions. Based on that analysis, you can come to an educated understanding on the probability of each direction. Therefore, you can manage your risk, apply your capital, and reap the benefits without exposing yourself to a tremendous risk. All right, let's go ahead and look at some technical indicators. So for that, we're gonna zoom out. Actually, we're gonna go to Trading View again for that one. Actually, let's go ahead and bring up the Brave New Coin Liquid Index. Always better to have a larger time frame. And I wanted to bring up another thing that I want to keep an eye on for Bitcoin. And this is in fact a chart we were looking at the other day, and I think I want to go to the monthly, in fact. All right, so we have our 7-day 200-day moving average in here. We're going to get rid of that one. I was just playing around with dates over here, so I don't worry about this. The orange line is the 200-day moving average adjusted to the 7-day chart, pasted on the monthly. All right, we then have our Ichimoku cloud. What we're going to do is we're going to get rid of everything on the cloud except our baseline, and we can see right here the price is retouching that baseline. Every time we drop below the baseline, we see significant crashes. All right, here we go, big crash. Here we go, big crash to the 200. What's happening right now? We are on that baseline. If we lose a baseline, we see a big crash to 24,000. All right, history repeats itself, but it's not always identical. It is simple as that. We can expect the price to move down if we lose this baseline. Where is the baseline situated? Guess where it's situated? you can probably guess where it's situated. It is situated on this uptrending black line. That is not a coincidence. It is just another piece of data to suggest that in fact that black line is a very strong, very important support level to hold. On the contrary, guys, we have seen a few times in May. I've got these green lines here. I just want to quickly go ahead and get rid of everything that is not May. That the price has bounced from this Ichimoku cloud baseline in May and actually formed a new uptrend. All right, so we do have a possibility of that, and that is why I haven't eliminated the bullish scenario completely. We're much more bearish, and we're much more bearish the entire time. That is why I still tell you guys about this bullish scenario. I keep telling you guys what we need to look out for, what we can expect, when are we going to be bullish again, because this chart even suggests that there is still possible upside. All right, we are kind of at a deciding point right now, and that is why you will either see people aggressively leaning towards bullish arguments, aggressively leaning towards bearish arguments, or people like myself who identify both, talk about both, but definitely bring up the risk and probability of either scenario. And we try and make it very, very clear what exactly needs to occur for each of these to play out. If you're not looking at both scenarios, you're shooting yourself in the foot, or you're looking at something with one eye open, or whatever analogy you want to use, half glass full, whatever. All right? You're not looking at the whole picture. All right. So that's another thing I want to bring up. Let's go ahead and get rid of some of that stuff. We're going to go to a daily. Let's go to the weekly again, actually, and we're going to bring up some technical indicators. So of course, starting with the bull market support band, we can see we are still under the bull market support band. Again, it's not a coincidence where this stuff lines up, guys. Bull market support band sitting around that major 42,000 to 42,500 resistance zone, indicating that in fact is a major point of confluence on the chart and a point that we need to flip to get bullish again. Ichimoku cloud, we have lost the clouds. Now, there is an exception to the rule when it comes to trading Ichimoku cloud. If the price goes below the clouds, but the lagging span is either above or within the clouds, we can't assume that this is going to continue downwards. We have to assume that both possibilities of the price continuing up or down is still on the tables. If the lagging span dropped below the clouds here, the price is below the clouds, so come down a little bit lower, we can then confirm we are in fact continuing downwards from here. All right, that is according to the weekly chart. Of course, if we go to a smaller time frame, we'll see a slightly different story. Over here, very different story. Underneath the price, lagging spans, underneath the clouds, confirming we are in fact in a downtrend. All right, so again, time periods are important when looking at charts. Time periods are very important. Let's go ahead and bring up the Gaussian channel, my favorite indicator, one of my favorite indicators of all time. I find this is absolutely a phenomenal indicator when it comes to predicting macro price movements. We can see we got a resistance or rejection from the midline of the Gaussian channel, push back down, and we are pinching along the side of it. Usually when we see something like this, we do expect an eventual break into the Gaussian channel again. This is suggesting that we can possibly see a move back upwards, and guess what, where this midline is? It is around that major resistance zone, 44,000 to 44,500, where the 200-day moving average is on the daily. All right. None of this is a coincidence. All of this is planned. Technical analysis can identify a lot of things that you would assume to never know. All right, it's a very handy tool when you get to know how to use it. So on the contrary, guys, just like we see the price breaking through the channel to the downside, I'm actually going to go to a daily chart. It might be a little bit easier for you guys to understand this. A little bit more, less smoothed out. Let's go to daily. All right, just as we see when the price enters the Gaussian channel, and we called the top, we called the crash occurring on that day when the price entered the Gaussian channel, we can expect the price to continue throughout. When we enter in, we can expect the price to continue upwards. The only differences are we can find support and resistance throughout the midline of the channel. Not always, it is quite rare to see, but it can happen. All right, again, fall below, we go below. All right, so what are we seeing now? If we invert the chart, here we are above the channel, just sneaking on top of it, So there's one or two things are going to happen here. If we fall back into the channel, which means we lose the descending wedge, we break above the descending wedge, it can suggest a move back into the channel to the midline, which is at 42,000 to 42,500, which confirms the statement we made earlier, which is if we break out of the descending channel and 100-day moving average, we will see a move to 42,000 to 42,500. Every statement I tell you is backed by data. We are not just telling you random facts. We are not making things up. Everything I tell you on this channel is backed by actual technical data. That is the technical data that supports my theory. On the contrary, guys, we are seeing a similar scenario to what we saw here, which is we flip from the green to the red, we find support above the above the channel, and then we enter some sort of prolonged trend above the channel over here. Yes, that is a possibility. Yes, we are aware of that. Where will that send us? $24,000. So guys, everything is pointing towards that price target. Everything is in fact exactly how it's planned. And I hope so far the video is, you find it entertaining and enjoying the content. And most importantly, guys, I hope you're finding it very much beneficial. So let's go ahead and take a look at the total cryptocurrency market cap. So the total cryptocurrency market cap so far is looking pretty shabby. It's looking pretty shabby. It's somewhat reflecting what we saw in the Bitcoin chart was an ascending channel, but we had a short-term rejection and breakdown over here, rejection, push down over here. I'm just going to go ahead and say this will most likely follow, this will follow or will represent the market. Of course, it is the total cryptocurrency market cap, but it will follow and represent what Bitcoin does and altcoins. So it's more of an average between the two. If Bitcoin loses 37,300, 37,600, we can expect the price to head down to this range. Where will Bitcoin go if this happens? We can expect about $24,000 to $30,000. Of course, we lose that level, obviously sending us down to around here, 1,024,000. Very possible, very likely. Nothing on this chart is screaming, you know, amazing. We are having some support over here, but like I said, if we lose that level, we're pretty much doomed, all right? So until then, we can definitely see a push upwards to this range. I got this yellow line in here, sort of where I expect to see some kind of push upwards to. Where would that send Bitcoin? Guess what? $44,000. All right, simple as that. Bitcoin dominance. This is one bit of evidence that can suggest some sort of relaxation in the market here, some kind of easing off that bearish pressure and some sort of rally up or relief for altcoins. We have a rejection on the Bitcoin dominance chart. Every time we see a rejection on the Bitcoin dominance chart from this trend line in the past, we have seen altcoins rally. Now, the distance between the top and the bottom signifies the strength of the rally. All right, the bigger the drop, the bigger the rally. The smaller drop, the smaller rally. Altcoins rallied over here, much smaller. In the beginning of March, remember February, March, they rallied about 40-50%. Here, they rallied a couple hundred. Here, they rallied multiple hundreds. Even over here, guys, April, down here, they rallied, some did thousands of percent. All right, so this is what we're seeing. We're seeing a potential drop down, which would signify another potential small rally for altcoins. So keep that in mind, and try think about that in application with everything else I've told you in today's video so far. Specifically, how could you use this information alongside some of the other bits of information I've given you in regards to where we think our triggers are going to be, where you should be looking to enter ECT. All right, so what this is going to say is saying if Bitcoin breaks above those zones of confluence, which is a descending channel and the 100-day moving average, we can expect altcoins actually see some kind of rally. We can see some positive buying pressure here for altcoins, and we actually might enter some nice scalps for altcoins because we are once again rejecting from this trend line. Now, really important on the flip side, if we break this ascending zone of resistance, we can expect altcoins to massively bleed. We're talking 50, 60, 70% more. All right, do I think it's going to happen? Really hard to say. At the end of the day, this channel is a descending line of resistance, so at some point it will break upwards. So we can assume that it's more common, more likely than not that this will happen. It should take a massive reversal in the market to allow, obviously, this to drop below this red zone again, and allow altcoins to go parabolic. Remember, below off tops, below off tops, below off tops are altcoins. All right, lose this level, same thing happens, blow off tops. All right, let's go to the DXY chart. DXY chart is looking pretty good in regards to the DXY price action, but for us it's really bad. So it's looking good, it's looking bullish, but for what does that mean for us? Obviously it's terrible, it's bad for us. We don't want that in crypto, risk assets, terrible. And we've done a whole video about how the DXY, or should I say, how interest rates impact you, how interest rates impact risk assets, cryptocurrency, and how is this, what you're seeing here, this whole diagram, how does this represent the price of the DXY? Because the DXY, the price, is a visual representation of this whole occurrence up here. The price is a visual representation of this. All right, and we've talked about it, what you're seeing here, a lot. I highly recommend going to my YouTube. I'm going to quickly show you a video in case you're interested in. Let's quickly go to my channel, videos. If you want to learn about more about that, you can actually watch this video here. But if you want the most in-depth analysis of that and talk about that, come down here. How interest rates rising will affect Bitcoin and other risk assets. That is where we talk about it in about 18-minute video extensively, all about it. So DXY is looking bullish. Above $103, we can expect the price to rise. I think we talked about it a little bit in the other video, which is we expect anything between $1.10, realistically $1.10 upwards. Sorry, $110 or 110, sorry, just on the index upwards. So DXY has definitely got a lot more to go. But in saying that, if we print a really bearish candle here, we can actually see some sort of relief rally, a drop down for the risk market, and then a continuation upwards. Definitely possible, definitely not something to avoid. So guys, that about wraps up most of the video. We're going to go ahead and answer the question next. Okay, so just bring up the question again. The question was, I have a question. What would you say is a realistic growth attainable for a smaller portfolio, less than $10,000 in the next bull run? And how should you allocate those funds? So thank you for submitting your question. I really appreciate the questions. I really love answering these questions. It keeps me thinking and gives me something new to look at. If you want your question submitted for the next video, all you need to do is comment below on this video your question, and we can submit it for the next one. So let's go ahead and look at this chart here. First and foremost, how much growth is attainable for a $10,000 portfolio at the beginning of the bull market? If you buy at the beginning of the bull market, you have uncapped potential almost. Allocation and timing are the two most key fundamental components of profits in a market. So if you buy at the absolute bottom, you could easily make $1 million. But here's the other thing. It depends which coins you buy. Not every coin is going to go 30x. Not every coin is going to go 100 or 200x. It is about vetting or scoping out low value coins, right? In the sense that they're cheap, low value, which have high value. So valuable, low value coins. I know I just butchered that. High value coins which are cheap, all right? So, or under recognized, or not adopted, or not really known of, or even valuable coins that have dropped a lot from the previous cycle. That is how you make a lot of money in crypto. The other thing which is really important, I just want to go over, is the timing of your placements of your capital. So the timing of your capital investments is another really important thing. If we take a look at this chart, on the left we have the altcoin perp, so altcoin index. On the right we have the Bitcoin index or Bitcoin chart. What we can see is we've clearly labeled the bottom for each cycle. So the bottom over here was the March 2020 crash, the absolute bottom for both charts. And then we have the January, which is the first peak on the Bitcoin. We can see that initially investing in Bitcoin would have resulted in a 10x profit, where initially investing in altcoins would have given you an average of 4.73. This is the average, all right? So 437%, which is about 5.7 times in value, right? This is about 11 times. So in the next cycle, you should be looking to accumulate Bitcoin at the bottom initially, ride that first wave up on Bitcoin, then on that first drop, you shift your profits or you shift your funds into altcoins. Because look what happened next. From that first drop onwards, altcoins did significantly higher profits than Bitcoin did. Significantly. This is where altcoins like Solana popped off. This is where altcoins like Matic did 200x. This is where altcoins like SHIB exploded in value. So this is where you want to be making the majority of profits. If we go from there again, we can see the drop down of altcoins was phenomenally larger or significantly larger than it was on Bitcoin. A 10% difference is quite large, guys. All right, a 10% difference isn't a small difference. All right, it is not a small difference when it comes to losing value, especially after you would have probably made a lot of money. That's a significant amount. Coming forward, on that next bounce, Bitcoin went up about 70%. Altcoins on average though went up 140. So what I'm trying to get at is that first initial rally, Bitcoin is where you should put your money. That is where your money should be. After the first initial Bitcoin drop, big drop, then you shift your money into altcoins, and you trade altcoins until the end of the bull market. All right, until the end of the bull market, which was, I'm gonna write it up over here, which was here. That is how I do it. I buy Bitcoin at the start of the rally, I hold it. After that first drop, I shift entirely to altcoins. I don't even hold any Bitcoin anymore. I'm entirely trading and holding altcoins for that rally, selling at the top of these rallies, buying at the bottom of the rally, just like we did. We called 11th July, the bottom. We bought the bottom, and then we called the top. We sell the top. That is it. That is the best way to make capital, best way to grow a portfolio, following that method. Money will flow from Bitcoin first, then into altcoins. All right? I might do another video explaining this more in detail another time, but for now, I think I'll leave it at that. I do want to quickly end by talking about the Crypto Academy course. We're going to go ahead and bring that up just in a second. So I just wanted to bring up the Crypto Academy course just to finish off the video. If you're interested in learning how to become a trader, we have a 10-week course launching in about 15 days. We cover everything from basics, technical analysis, bullish market patterns, different indicators, candlesticks, how to find trades yourself, and advanced risk management. We do this in about 450 slides, 40 to 50 hours of content, 85 videos, and a variety of different worksheets and practice tools to learn and teach you guys how to trade. Along with this, we also teach you how to manage your Excel spreadsheets for taxes, and we show you how to create a trading journal. If you want more information on joining this course, go ahead and contact cryptoacademycourses@gmail.com for more information. I hope you enjoyed the video, guys. It's been a pleasure, and I'll catch you in the next one.